Welcome to this video on reconciling your AR and AP ledger balances with the general ledger, and you are in for a treat. We've managed to drag Andrew Hulley, one of our Intacct consultants, away from his busy schedule to give us a guide on the reasons why you might not be able to reconcile the ledgers and what to do if you ever find yourself in this situation. Take it away, Andrew.
Thank you for that, Peter. I'm just going to delve into this in a little bit more detail. So quite a common query that comes to ourselves is around the general ledger report not balancing with a customer or supplier aging report, and specifically around the control accounts. So you would know better at control account as either the debtors account or the creditors account, which are known as control accounts across accounting platforms. This imbalance is normally due to data entry errors, but it's most commonly attributed to one of the three scenarios shown on screen. 1, the balances do not balance. 2, the criteria that you're running the reports on is incorrect. And 3, the allocation/payment dates are incorrect and therefore cause an imbalance on the reports. I'm going to run you through each of the three scenarios in a little bit more detail. Scenario 1, balances do not balance. In this scenario, International Oats have went live on the 1st of June 2024. They have brought in their opening AP invoices, as you can see by the history title. They total £10,600. And as you know, open AP invoices that are imported as historic invoices do not post to the general ledger. So what reports would we run to check those balances? So if I went into supplier agent and into a report, and I ran that as of the end of May 2024, I would expect to see 10,600. So that is matching what the AP ledger says. However, if I run the general ledger report for the creditors control account for the end of the month to see what opening balance was brought in as of the 31st of May, I can see that this shows 10,000, a difference of £600. It is more common than you think that these balances differ at go live. Quite often the scenario is that the invoices are brought in, the customer goes live, and the opening trial balance is brought in at a later point, which never or sometimes matches what the balance is of the historical invoices. Another part of balances do not balance is posting directly to the control accounts via a manual journal, for example. What we can do to stop this happening is simply click on this button within the general ledger account to disallow direct posting, and that will not allow you to post directly to the control account. If a journal is posted to the accounts payable or accounts receivable control account, it doesn't flow back to the respective AP or AR subledger. There should be no postings directly to the control accounts, as this often happens and causes an imbalance. Again, to stop that happening, you would click this button to disallow direct posting. The only time that button should be unticked is when you're importing your opening trial balance and your movement journals to go live. Scenario 2, the criteria is incorrect. So same company, International Oats, they have received and added a sales invoice for the 1st of June 2024. I'm going to first of all go and run the general ledger report. I'm going to run it to the end of their first working week, which is the 2nd of June 2024 and month to date. And I'm going to do it for debtors control account. I click and view that. That shows a balance of 0. just going to duplicate this tab, and I'm going to go into the accounts receivable function, and I'm going to run the aging report. I'm going to run it as of the 2nd of June, and I'm going to click view. What you'll see is 10,000. So there's a difference between the general ledger and the customer aging report. I'm going to show you why. If I go back to my AR invoices screen, you'll see that the invoice date is the 1st of June. However, it has got a post and date of the 5th of June. That means the invoice hasn't posted to the general ledger until the 5th. If I go back to my aging report and customize that and use GL post and date rather than invoice date, you'll see that this now shows 0, which matches the general ledger. If I change the date to the 5th, which is the post and date on the invoice, that gives me 10,000. If I go back to my general ledger and change the date to the 5th, it will go to 10,000, which shows the balance. Very common that the criteria used is incorrect. Another one, when running the general ledger, if they're doing it weekly rather than monthly, they might leave it selected to current month rather than current month to date. So if I selected current month and ran it for the 2nd, it's still going to show because it's not running month to date, even though it's dated the 5th. Another thing to look out for. Final thing in terms of criteria, if you have foreign currency transactions, you need to look at the exchange rate type when running the aging reports. Okay, if you remove the exchange rate type and leave it blank, as long as everything else is okay, the two should balance. If you leave the daily rate in, it will use a different rate against your transaction and your reports, causing an imbalance. Scenario 3, allocation payment dates. In this example for whole load groats, we have an advance made by the customer, a payment on account where they have paid up front an amount of £500 dated the 31st of May 2024. They also have an invoice that they received the next day for £500, which is dated the 1st of the 6th, 2024. Just to show you, the invoice date and the posting date are the same. What they have then done is they have went into record new payments and they've allocated the £500 payment on account / advance to the £500 invoice. And they've used the date of the 31st of the 5th, 2024, the date the money was paid up front. So if we go into the general ledger and run the report as of the 31st of the 5th for the debtors control, you can see the £500 advance and then your allocation post in there. If I run the aging report for the 31st of May, it shows nothing. Really, what should show on there is the advance of £500, but because it's been allocated, it's causing the imbalance. If I ran them for the after the invoice date, so the 1st, you get 0 on the aging report, and for the 1st of June, for the debtors control account, it's back to 0. So once the invoice date passes, it then sorts itself out. However, there might just not be one day between the payment on account and the invoice, which could throw it off quite significantly. Another scenario is when you've got an invoice dated 25th of May, for example, but you actually received the payment on the 20th of May, and you've just went in against that invoice and recorded the receipt against the invoice for the 20th of May prior to the invoice date. That will give you the same scenario where it will throw off the general ledger report, and the customer agent report. To prevent this, there's a setting that you can select. So if you go into accounts receivable configuration, and you want to be selecting this option here, payment dates must be greater than their AR sales invoice dates. There's a similar setting on accounts payable that will do the same thing. But what this does, it stops you allocating receipts in AR and payments in AP prior to the invoice date, as well as recording receipts and payments when you haven't used an advance. That will keep your reconciliation against your control accounts working going forward. That is probably, like I mentioned earlier, the most common scenario out of the three. Thank you for watching. For further content, please visit our HighSpot page, which will be full of useful videos and one-page documents. Thank you.
Thanks for that, Andrew. Excellent. Well, that's it for this video. Thank you for watching, and keep an eye out for more content like this from the Sage Intacct team.